Welcome to TradeTheNBI.com. This is John. This report is for the 29th. And, hope everyone had a wonderful Memorial Day. The markets were a little bit roughed up, just fractionally here. We've been trading between these ABM values, still well below the ABM yellow gold line up here, the 2750. If we highlight those, we can read what they all are. We've got declining Morganacci lows, which just means that the 100% value, the high, is declining. There it is, 2750. We had 24, 28, 1750, and 37. My intraday charts, I've been marking the 28 to 32 range as a continued short area that we've been attacking last few days. We've had significantly decent short interest here with no long-term buyer support whatsoever. Short-term buyers are the only thing keeping this thing held up, and they've started to fade a little bit here in the pre-market. You can see we're already below the ABM green, which was at the 17 level, so that becomes significant. NASDAQ, while healthier, particularly from a shakeout standpoint, let's look at that shakeout from the ES here is negative now, so big difference between the two. Still positive here. It could change pretty quick, but it's just worth noting. Here's the real action of it. I've been talking about this for, well, how long, pointing out all the retrace levels and the fact that we noticed the U.S. Fed stopped being interested in floating the euro. And there you go. Now, everyone's going to talk about the systemic risks of Italy, blah, 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 blah. And those are all real things. That's exacerbated the move. This was still coming back to this level, and it's actually just getting back into its normalization. This was a premium put on the idea that somehow there was going to be outpaced euro growth over the U.S., and it had its benefits for U.S. corporations, blah, 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 blah. And we can go into the details, but not relevant. The Italy crisis for its political situation is significant because it does present some inherent risk to the euro going forward. That's actually going to make a big difference for a lot of other pricing. I think causes oil to fade because a cheaper euro certainly means you don't have to elevate oil prices for Central or Mid-Eastern countries that purchase a lot of items in euros, and the exchange really has an impact on them. A lot of people are going to blame the oil retrace on a lot of other things, but that's going to have much more of an impact than people recognize. This move in treasuries, bizarre, complete counterbalance to what's going on, and here is that oil drug. Now, we've talked about how long, forever, the positive extreme from here, dip below the red line, that all needed to get retraced. We just had to wait for this exuberance to come through, and some of this was just getting ahead of the curve. It's still going to have the impact for summer gas prices, at least for a while, so this drop won't take effect until fall begins, which is so kind of ironic, unless it's really precipitous and comes back pretty fast, because a lot of people had to get futures contracts at these levels that pop them into a much higher category. So we've got a lot of areas to refill in there, and it's just a classic DOC spread. Actually, the best part of it was this right here. I love this when the steel dips, orange skyrockets when you have green above, and particularly if cyan moves above zero. So literally right there, to me, is a premium short setup. Actually working a system that goes with that pretty effectively. And the key for it is literally having the steel come back, cross the red, and then at that particular point, if the steel gets up in the higher range, and like I'll show this on Bitcoin again, becomes a very effective longer-term trade. Some might also attribute U.S. slowdown or something else to this. I think that's a bit premature. Gold. The short spike here, obviously, we filled in what needed to be for this dip below the red line. Should continue to ebb higher over time. Well, this is what we were talking about. So we had this giant Bitcoin short from the DOC spread that took place back over here, and we were talking about how the steel remaining above for the solid continuation. There's two approaches to the setup with this. When you get the steel running this high, I'll start to enlarge it just so you get an idea. You can look for the closeout of the situation when the green crosses above the cyan. In this particular case, that took place back over here. That could be an initial trigger to let you know that, hey, you've got a rally that is going to have a little bit more sustained move to it. Less effective when the shakeout is below the -13 line. Certainly above that -13 line certainly has a little bit more oomph. As you can see from the short so far through here, hasn't changed, which would mean there'd be no reason to cover any pop in Bitcoin at this particular point. You can see we continue to make new lows down to 7,100. So here's the ES futures. Wow, that's a garbled little mess. Okay, so this was the area I was talking about right up here, the 32. Shorted that earlier. Came up when the pop came in there, attacked it short again, expecting the lows coming off the white candles. Those lows are always revisited after a spike. That happens, about 80% of the time. Within a day or two. Sometimes it can go into the following day. Becomes a great opportunity to capture both a long on a positive shakeout and then to attack any short signals, because it does come back to usually the initial candle value right in there. But oftentimes we'll take to the low and make new lows. So here we have the similar situation. All these are the little dots, cute, represent just the positive extremes. And a little bit higher value on the yellow extends an extra bar going through there. But that became attractive in pre-market shorting of the Memorial Day. And people forget that the market is actually open until the U.S. Open, and then it closes. So took advantage of that one. Very nice. It was down a little bit lower, but even with the price popping up around the 50%, became opportunities to add in. And then, of course, we opened up and continued to fade. This was pretty straightforward setup now. Similar situation. So again here, one of my favorites where you get the snake right here. Steel dips below orange rising, green is above orange, and particularly if steel crosses below cyan, you look for cyan to move above 0 as a strong confirmation that you're going to get a more exacerbated move. It doesn't tend to move as much when you have it below. So once the steel crossed below, back above red, that's where you begin to look, and then this becomes a key one right here. When these two babies meet, cyan and green met right there, minus 393 to minus 428. Effectively, the green crosses, but just barely, and still within relatively short move with orange rising and steel falling. And then immediately the rejection becomes a second opportunity at shorting, even on that big down bar. Sure enough, that's what it produces. So it becomes very clean. Of course, you could have just shorted the negative shakeout, but just pointing out the DOC setups within this as it happens. Now we're getting into some decent distribution here with the dip below the red line, but you still have breakdown. You're likely to get a little bit of a pop here. You tend to see those when we break below this, the negative 20 on the DOC. I don't have a line there because otherwise the chart would be shrunken too much, so we leave it just there. But it tends to have repeating value, and you can go back through. Usually stronger when the red is down at that level. You get a little bit more sustained run. Doesn't mean necessarily that a downtrend is over. It just means that you're going to have a pop within that. In this particular case, again, you're going to be wanting to watch for that cyan-green relationship, or likewise a steel dip back below red or green, particularly red, as ending the short run. Otherwise, it is just a short at this particular point. So All in all, good. Like I was mentioning before, with the new indicators coming out, I'm going to have this as an input on the Morganachis, where you can just put a 1 and the span distance will show up like this. It only pops up when there's a change in the overall value. So as it adjusts, you can see what the potentials are for a given range, because sometimes playing moves below the 50% and above don't make a whole lot of sense when your range is down to 10 or 12. Then you're talking about the full range. But when you get up into these, like now we're in the mid-20s, it's starting to get to be a pretty decent range, particularly as it grows to the higher 20s and greater. So all in all, good stuff, and it's been an interesting kind of month. I think that we're probably going to struggle as it goes into these last couple of days, and people end their book. It's the sell in May and go away. Still holds some value for some people. I don't know necessarily that's the case this year, but we're just going to follow what we've got, and we keep getting good signals and keep making great progress on some of these adjustment trades. I think the white candle setup really becomes a powerful one from an extended view, and I'm going to do that on broader charts, but definitely from a 5K standpoint, it's a fantastic setup. It lets us know not also to get caught up in what appear to be buy signals that don't tend to have as much, but sometimes they do convert into decent buys, but they have to prove it, and that's usually involving getting back over that 23%, which that becomes pretty basic for all of us anyway. So, as always, though, trade well, and I will continue to put up charts in the Skype chat. Ciao for now.